We're starting.
Hey guys, how you doing?
No.
Wake up, Daniel. No yawning this morning.
Why are you yelling?
I am kind of yelling.
I'm like,
See, it's hidden right there. It's just right below where you can't see. Anyway, I got a question for you guys. Stop it, Royce. I see that look.
I said nothing. I am drinking my.
You did not, but you thought it. All right, here we go. I got a question for you guys.
Yes.
And this is in honor of last night's State of the Union. Raise your hand if you think that Congress should not be able to put money in the stock market while they're so close to insider information and even on these committees and everything else.
I think we got to be specific here. You mean selecting single stocks?
Well, let's just say in general.
Because saying that they totally can't invest.
We're not going to debate that whole thing right now. We're not going to debate that whole thing because that's where we'd probably break up. Where someone would say not at all.
That is in any way related to any of the subcommittees that they're involved in.
Yes.
There we go.
And then how do you prove that? And how do you enforce that?
So, but the question here is...
Wait. I used to work at Goldman, and I could only buy specific stocks that I put in a specific request for at a specific time, and I had to hold for a specific amount of time. You can totally enforce that.
So only indices.
It's rules for the...
Yes.
Which gives... We'll get into that later. There's another program which he announced last night, $1,000 program for every child or whatever it was, up matching. Government will match it up to 1,000 or something like that. And of course, all the brokerages are going slobbering, getting all over their clothes because like, oh, here's more money for us to get to play with and pump the stock market.
So many kids.
All right, so to answer the question, then, in the simplest form, not all the details, do you guys like politicians in Congress and Senate being able to put money in the stock market, especially those that are on committees? If you do not like that, raise your hand. You don't like them being able to do that when they probably have insider information.
Royce likes it.
Royce likes it. Okay.
They use arbitrage bands to do so, Royce.
All right. Well,
technically, statistics and probability does the exact same thing.
So here's the thing.
If you have enough information to make the proper decision based on what you see happening, isn't that inside information?
Yeah, but it's being able to directly control the outcomes where you kind of have to draw the line.
You can even control what way and how much of is being bet into something you know is about to happen that nobody else knows about.
Right. Yeah, but then there are market
and the timing of it even.
But they're market makers. You're not sure how people are going to respond to the
it's more like being the CEO of a company and you're about to be acquired for a 50% premium and you have your wife buy $10 million of shares. Mm-hmm. And then
but he's okay with that.
Up 50% tomorrow.
Royce is okay with that because
the question is, did she
sell? Going to do what it's going to do.
Did she sell it? It's not a realized gain.
Eventually.
She has sold at the right time many times.
She's a trader, not investor. Let's be clear.
She has sold many times in the right exact spot. Just like, wow. She's the greatest of all time.
Based on volume, right? Market makers basically control the inflows and outflows via volume. So I'm like,
So the vote is the people who say yes is 3, and the people who say no, there shouldn't be any regulation on that, is 2. It's Royce and Nancy Pelosi. All right, let's keep going. Here we go.
I just want to bring in a stat for us real quick.
That took so long.
By the way, it's not just. I mean, there's plenty of Republicans. There's that site that lists all the politicians who do this, and it's not just her. It's just she somehow is like the queen and the best of all time at doing it. So. And I'm sure being
in 1987, she reportedly started with about $700,000 in stock, we'll say. Mm-hmm. And by late 2025, her portfolio is estimated to be worth $133 million.
That's very doable. I've done the same.
54%.
You got to count her husbands too.
No.
Count her husbands too.
So when I started Arbitrage, I started with $5,000. and $5,000 is worth over $10 million now. So if you just look at matter of, okay, 700,000, she started with a bigger egg, but that bigger egg, did it actually do the same thing that my 5,000 did to become 10 million?
But she sold it. She made a lot more than that. She's just, I assume that what he's looking at is what she currently owns. I don't know. But I mean, over the years, if you look at a graph of everybody, including the indices, it's like the indices are here and she's like, way up here with her returns.
Have you seen our charts compared to the regular stock market?
Because the indices are subject to regulations.
She must be using our charts then, since then.
That's her secret.
Right? That's what it is. Something tells me she does not work as hard to be able to do this.
And the biggest thing that I've ever seen with the stock market, and this is the biggest fallacy that, in my opinion, that's out there. When you buy a position, you always buy all in, meaning whatever you're wanting to put on a stock, you put all that in at one time. And then when you're leaving, you take it all off at one time. That is not how professional traders or investors trade. They're like, you know what? I think I want to buy that. Let me put 25%. Let me add 50% of what I want to put on the table. Let me put 100%. Okay, that looks like it's petering out. Let me take about 75% off the table. Leave the 25 there to do whatever I'm going to do. If it falls a little bit, okay, I'll take that off too. If it goes up, that's line yap. Let's go.
Yep.
So it's like, it's not necessarily okay. Yes, she probably is really good at trading as well. And that information probably does help her as well. But at the same time, it's like, if you realize it's never an all or nothing, then yeah, it looks like you're a genius. Because you always have an opportunity to have something on the table or it's like a lottery ticket. You can't win if you don't play.
It's not her any more than it was Biden running the country. She has people that do it for her.
It's the lizard people.
Right. No, which all have a station on the other side of the moon, which we never see.
Discriminate from the lizard people. Okay.
All right, especially with what all we're talking about. Let me get the introductions and especially the disclosures out of the way here, and that is that we have Daniel Hopwood right here to my left, which is the screen right. This is like stage left and right, and then down below me we got that guy JPM, the greatest Jamie Dimon, JBP Morgan Chase, all of that good stuff, and representing the SEC. Thank you. Except it's the wrong color. It should be orange. And then diagonal.
I got it.
And that's hard to do. Diagonal down there is Quanticus Maximus. It is Royce Wells. All right. But the biggest thing, especially since we already started talking about this, is that we are not financial advisors. We're not as good as Nancy Pelosi. Well, yeah, we are.
Get out of here.
Speak for yourself.
Is that what the P in PIP stands for? Never mind. All right, so we are not financial advisors. This is not financial advice.
Piplosi, got it.
New feature.
Please let me make that picture of what it would look like. The information provided is surely for educational and entertainment purposes only. Please always consult a professional investment person before making any financial decisions. All right, so I got that out of the way. Or go order for Congress. Yes.
There you go. See, it all balances.
Tell us what to buy depending on what committee you sit on.
Right? And then you'll all take up for each other and you'll play good cop, bad cop. But that's not why we're here. What'd you say, Royce?
I say don't buy Budweiser or Anheuser-Busch right now.
See, who cares now? We'll talk about that later.
Oh, dang. Okay.
Daniel sold all of his Bud stock, but we'll talk about that later. All right, so first thing is the markets, and I've got, of course, the updates, etc. So let's get this going. I think I wrote it too small, but anyway, we got the Dow Jones did not quite reach back up to 50. It's at 49,482, which was a plus 0.63. We have the S&P 500 that didn't quite make it to 7. It's at 69.48, which is plus 0.84%. We have the NASDAQ at 23,152, and it was the big winner today at plus 1.26, so that everybody can say, see, we got things that are coming out of the big tech and into other things. Whatever. Dollar is at 97.62. And that's basically the same as it was last week when we met. WTI crude was also about the same as when we met last week, which is 65.54. Gold is at 51.84. It did jump back up over 50 and kept going, or 5,000 and going. It is definitely up. Silver is roaring back. It's at 89.1. It's hugely up. And we've got copper, which is also up. Bitcoin is making a move, as all the crypto is. It went over one of our favorite numbers, 69, and that makes it up 3.75 from last week. And then we've got the XRP. It tried so hard. It was the train that could, but it didn't quite, to hit 1.50. And last I looked, it was a 1.48. But of course, it's moving as we speak. So, and then we've got the 10-year that is a little down from last week at 4.05. Yeah. So, Daniel, there's your setup. What's going on? Oh, NVIDIA. It's NVIDIA day. It's actually NVIDIA, Salesforce, and what's the other one? There's like 3 biggies today. It's another S one. I've lost
sales.
Oh, I can look at my.
Yeah, after the software sell off, those companies are irrelevant. So,
but that's what it is. No, Snowflake is one of them. Snowflake, Salesforce, and NVIDIA. Those are the big 3. All right.
See, I got you, brother.
So
that was not Daniel, insider information.
What you got going on, Daniel?
Let's see. So, quarterly. Oh, what the heck is this? Okay. Quarterly revenue for NVIDIA was up 20% from Q3 and up 73% on the year, so 68 billion. Their data center revenue about the same, up 22% on the quarter and 75% on the year. And their full revenue was up 65%. I believe that's on the year number. So they beat definitely by a pretty good amount,
a little bit,
even by their past beat standards. So it's still slowing, but still like pretty healthy beats. I think the market didn't anticipate them not beating, but it was kind of by how much future demand was going. So right now, after hours, they're still up. It's less than it was, but up about 1%.
And dropped down to 1.
Yeah, I know it was up.
You went over 4, I think, a little bit.
Yeah, and at least from what I was seeing online, is a lot of people were kind of waiting this week for NVIDIA to report because I forget the stat is, but if you look at NVIDIA holdings across all the various ETFs, they make up like a very large percentage of all ETF holdings. So it's really, it's not the market, but it's become a very large percentage of how the market moves. So everyone was kind of in anticipation of which way the market was going to potentially break based on the NVIDIA
up and to the right. Up and to the right.
That's what the earnings report would anticipate.
But I was telling Royce this earlier. By the way, the margin was around 75%. I was telling Royce this earlier, though. It's like the street. It doesn't matter what forward guidance is, because as we get close to the next earnings report for NVIDIA, the street's going to say, nope, I don't care what they said. This is what the actual number is that we think. So the street changes what NVIDIA said themselves is going to, and goes with any company, to where it's nice and low, so that no matter what, they're going to jump that hurdle when it comes time for those numbers to be released, so that everybody's excited and blah, blah, blah. No, well, is that not what happens?
If you're running a company, you always want to under evaluate, so that way if you beat it, you're good. If you don't beat it, it doesn't wind up tanking your company. Because remember, the only reason companies are public are to raise money. They're literally borrowing from the shareholders.
Yep.
So be conservative and you get to have good earnings.
Yep. It's just a game that I think is fun that they play. Like I said, it doesn't really matter what the forward guidance is. And then companies have stopped doing forward guidance. Because, which is I'm for that, because the street's going to change it anyway and say, no, this is what we think, and we're going to make it really low so we all can jump over it. Unless we want that company to bankrupt, then we'll say we make it really high so they won't make it, and then bam, we can bankrupt them to death. That's a whole nother side thing.
Yeah, and you also have those people who are over optimistic and overshoot it, and then get egg on their face and like, oh, you're a rookie. This is your first time being public. Enjoy that. Bye.
Both rookie and retail both start with an R. So let's go. Oh, I know what he's going. It doesn't start with a D. It starts with an R. I got you. Okay. All right. And he's wearing red though. Look at him. He's wearing red. Look at that after the State of the Union. Wow. I didn't know, Josh. I mean, you're in that. Your Arkansas is kind of a red state, so
very patriotic.
Patriotic.
Yeah, the Bill Clinton state, right?
Yeah, that's right.
No count.
All right, let's move on. We'll just go ahead and do the current state of the economy. All right, so are we going to talk about the State of the Union again? We kind of just did that, but this is the state of the economy. So what are you talking about with core personal here, Daniel?
Yeah, so we got a few stats in of kind of how things grew annually and from last quarter. So core personal consumption expenditure, which is kind of just an inflation index, rose 0.4% from the previous month, but is up 3% on the year. So it's still above the 2% target that the current Fed has. Who knows if the next Fed will change anything with their inflation target. Fun fact, 2% inflation was that concept is set by some random Austrian man, and just every country has run with it ever since this random dude picked that number. So I think not to say that 2% is a bad number, but it's just kind of like a funny thing of he's like, yeah, I just kind of picked that. It seemed good, and every country has run with it since. So I always find that I think of that every time I see the 2% mandate of kind of like, it's a guy just randomly picked that number. Anyway, who knows? Maybe they'll change it just for Darin, so he has something to talk about.
No need. I won't believe it either way. So,
Darin, I think if they say they're going to change it to a 3% inflation target, that's like probably the one thing you can't believe.
It would be the one thing that say, okay, there's a reason. What's the reason behind them going from 2 to 3? There's a reason, because they'll never get to the 2 because of all the inflationary things that are happening right now.
Yeah, but if they say so, you would even believe in that number.
It's stupid anyway.
So he doesn't believe in the numbers anyways. So what is it?
I don't.
Yeah, it's like Matthew McConaughey in The Wolf of Wall Street. It's all fugazi, fugazi. It's made.
Yes,
up, right?
I need that T-shirt. Where is it?
I now know what your next birthday present is. Remember this.
Give us. Yes. Put BLS on the back. All right. The biggest thing here is the GDP, because this is hilarious. Go ahead.
Yeah. So GDP grew at 1.4% annually in Q4, but is well below the 2.5% forecast. So we initially thought, I forget what it was going to be, but they wanted GDP to grow at like 4 or 5%, but it's not projected to be doing that coming up. And I think a lot of GDP was pulled forward with people ordering a lot of inventory ahead of the tariffs that initially were set. And we'll talk about it in a sec, but with the change in tariffs, I think we're not going to see that pull forward, and over the next year we might actually see how things are supposed to be standing when it comes to GDP. Obviously, there's also like an AI investment and build out component, but we'll just have to see how that part goes. But this part's for Josh. Eggs are cheap now, so Trump did do something, but I'm allergic to eggs, so I don't eat eggs. So I don't.
They're still more expensive. They're still more expensive than the 4 years prior.
Mine are free.
We have chickens.
You laying eggs, Royce?
We have chicken. No, we have chickens.
Oh.
Those are the
He
good
only
eggs,
lays
too.
golden eggs. That's all he lays is golden eggs.
Yeah. Facts.
Like once you had like fresh chicken eggs, the other stuff tastes like
Garbage. Absolute garbage.
Like poured eggs
Mhm.
out of a carton.
Egg
All right.
beaters. Mm.
Yep. There you go. Wear your wife beater while you're doing it, scrambling them.
Darin, I got a question for you. Are you more likely to believe the numbers if they're good or if they're bad?
Neither. I go
He's
both
a
ways.
perma bear, so bad.
No,
How,
I'm saying
how do you,
I'm
how
just
do you
saying.
exist in the world? Do you like,
I
you know,
just-
like,
I just don't. I believe that everything's scripted, and people have a script to play out, and the world is a stage, and we all have a script and actors.
Are you
and,
Shakespeare now? What are you doing?
and the corporate world gets together to have their little theatrics in Davos, and then it's all just played out the rest of the year until the next meeting. Anyway,
it sounds like an
that's-
exhausting way to live.
that's the
I mean,
macro.
I will say,
Now,
to Daniel's earlier point, it is going to make that Fed decision pretty spicy.
Go ahead,
I mean,
tell us about it. Yes.
Given his stance, his policies on inflation, specifically sticky inflation, which is basically what that's what the label that they're using on it now. But it's I mean, there's a lot of things that went into the Q4 numbers. People like to blame it on other things, but there were a lot of things that went into it. But what it's really going to impact is that decision that the Fed has, and are we going to get rate cuts? Because if you ask a lot, any of the analysts or economists or anything like that, they're saying now that we're looking at maybe one rate cut, maybe two, and that would kind of cement what Trump was, his appointee and the new Fed chair. But that's not exactly what he wants. He wants the rates to come down, on day one, basically. So we'll kind of, just makes the whole decision-making process that much more interesting.
Remember, some of the FOMC meeting minutes were that a couple of said it would need to go up. The rates need to go up. So it's interesting. I mean, it's almost like nobody can make a decision either way, and we'll just all stay right here with the stagflation for a bit. We'll just see what happens. Any thoughts there, Royce, on inflation versus not inflation? The fact is, these ERs, the good ones, are because of prices being raised, and they're still making their numbers because you pay more. So therefore, you've reached what your sales goal was in these ERs. And so as long as inflation's going up, you're going to keep doing that. So once we hit the point where inflation's not going up, that's when we're going to have some trouble, I think. Go ahead, Royce. With ERs, that is.
Hold on, let me pull out my index cards. Would you want
I
me to
silenced
say
him. I silenced him.
No. So this is what. Okay, I always have to take it because I always take it off the rails for you guys, just for you guys, right? So let's say Warsh does become the Fed chair. Let's say everything is happening. Let's say the Genius Act did pass. Oh, it did. They're backing USDC, USDT by the FDIC over the US dollar currently since July 1st of last year. And if you're going to try to basically counteract inflation, you have to have a deflationary vehicle. You have to have a deflationary asset. And guess what? All of crypto is deflationary because they're not printing anymore. So basically, this is a regime change where one comes up, one goes down. The interest rate, if they lower it on the fiat side of the house, that's basically just going to encourage people to switch to the deflationary side of the house because they're telling people it's safer to invest in things than to leave it in the bank and earn interest. Every time they lower the interest rate, you're encouraging people to go out and invest. When you raise the interest rate, yes, there's inflation, but you're also signaling the people who are savers and thrifts to say, you know what? I'm going to get risk-free 5%. Why would I put my money out there if I'm guaranteed a 5% return, 10% return, whatever the return is based on whatever that interest rate is?
So you're saying that Warsh is going to do more of a crypto deflation rather than fighting inflation with interest rates?
Yes, because interest rates are on fiat currency, and because it's on fiat currency is naturally inflationary because all you do is mint dollars on this side of the house. So instead of minting new dollars, you start converting to things that you cannot mint because there already is a fixed supply. And that's where you get into T-bills. That's where you get into basically backing different things that are on the fiat side with digital assets to counteract.
USDT backed by fiat?
No.
Isn't that the whole?
Yes.
So it's basically there's supposed to be a 1-to-1 correlation.
Right.
But because of the Genius Act, and I'm making sure that you guys do understand this, if there is ever a run on the bank, on the U.S. government, on any of these physical banks that are out there, Tether and USDC will be the preferred currency backed and reimbursed. So like bank crashes, the USDC and USDT will be reimbursed first. And if there's anything left, they will reimburse fiat currency. And that was in the Genius Act. So the world's changing.
Yeah, we just need to know the timeline.
Yep. And basically what closes the door on this is the Clarity Act. The Clarity Act then basically allows the SEC as well as the CFTC to govern whose playground we're playing on and who has the right to regulate it.
But it's literally like the whole point of USDT was it's the ultimate stable coin. But
yes and no.
And if the basically intrinsic value of USDT is the fact that it's back 1-to-1 for the dollar, but you're making it seem like they've essentially just duplicated the currency.
Nope, they didn't duplicate it. It's still backed 1-to-1.
Okay,
and then you stop using
USDT,
one.
If USDT's intrinsic value is backed by the dollar, then it's essentially the digital version of the dollar.
Correct.
But you're
so
saying
you stop printing dollars and you start using the digital version of the dollar. And you stop, basically, the central banks are using fiat currency that basically they're sharing and distributing across the globe.
I just don't know how that would be deflationary.
Because basically you're swapping it out 1-for-1. Basically, each USDC or USDT token, as it stands on its ledger, is a decentralized bank. That's why there are multiple versions. That's why there's RLUSD. That's why there is USDT, USDC. These are all decentralized banks against the US dollar, as opposed to centralized banks that are all using the same dollar.
Okay, we'll have to sidebar this one.
Yeah. I'm just wondering how the Fed can go burr if everything goes digital. What do they? How do they create more?
It's the same as credit cards.
Dollars.
It's the same as credit cards, quite literally.
All right.
Let's make an NFT out of it.
Right.
No, that's just crazy. But okay.
That's the same thing I said to anybody who bought NFTs like 5 years ago.
Mine were all free and given to me. I didn't buy any.
So here's the funny thing. In the world that I'm picturing, an NFT is like a title deed to a house. Because basically it gives you the right to have the house.
Yeah.
So like
that's the real world application that should have only
but that was always my counter argument to that what NFT does, because you can literally just reprint an NFT.
But it's not the same one.
They found that out.
Yeah.
First rolled out.
But it is.
But it's not. You can make a copy of a copy.
Artists, they kept producing these bits of artwork, and they would be like, okay, yeah, well, you just hit Control-C, Control-P, and it's the same thing. It's just new.
Understood. But once again, if it's tied to a physical asset, even though you have another copy, do you have the one that's authentic? The one that, like, you can have multiple versions of a will. Only the final one counts.
At the Ape Talk here, you can also have multiple versions of a float.
In that particular example, it would be like, do you have the deed to the house or do you have the photocopy of the deed?
Deed to the exactly. It's like only the one with the
with art. I hear what you're saying, Josh, but like, you know, the title to a car or something, it's like, well, is this the real one or the photocopy one? Because no one cares about the photocopy one.
Exactly.
That's what we say about stocks. Is this the real stock or is it the copy of
Well,
the
as
stock.
of
You're
July,
the only one that
Counterfeit
says that,
stock.
Darin.
I just don't think the way a lot of those NFTs were structured, it's not like you've got a different like MD5 or hashtag or something like that. Like I mean, the files could literally be one-to-one duplications of each other.
Mm-hmm.
And they would be indistinguishable from the other.
Unless you look on the blockchain of what you
And
actually
see which
own.
one was minted first. Correct.
Yeah, there'll be a verification system somehow. I'm sure Palantir's working on that right now. Palantir and Israel are working on that right now. All right, I have a question though. It's for all of you guys because it kind of wraps up the other part of this tariffs thing. Is each of you answer? Do you believe that there are going to be lawsuits where companies get their money back on these tariffs?
Nope.
I'd say no. Nope.
I believe there are lawsuits. Yes, they're currently ordered.
There are lawsuits already
Are they
started.
going to get their
Just saying.
money back? No.
It's going to be a
Okay,
flood
thank
of
you.
lawsuits.
Yes.
It'll be a
Exactly.
flood of lawsuits on the front end. They will all go nowhere
Yep.
because I guess I thought we were going to talk about that in a minute, but if the tariffs themselves were not ruled illegal, it was just the manner in which they were enacted, then that's going to be the basis of, okay, yeah, we did it the wrong way, but we were still technically in the right.
Yeah, it was just the
And
funnel
they'll
and went
find
through.
some
That's
way to legalese it that it'll sound, and nothing will come of it.
yeah. It's basically like just rewrite this and come back to me with your answers, and if they're the same, then yeah, we'll allow it. It just won't be through that same vessel, but it'll be through this vessel, which we've already looked into and said was the way you can actually enact tariffs.
Yeah.
I mean, the Treasury's already planned for this. Like the Senate has increased their cash reserves up to like $1 billion now or something, or so. I mean, I don't know what the exact figure was, but he has come out and said that they're well equipped to refund just in case, but there's no need.
What I don't understand is basically tariffs. Tariffs, the way that they were intended to be imposed. Let's say, for example, you're an American and you're selling, I don't know, Red Bull in America, and it's $5 a can. Well, they're going to produce it over in Singapore for $2 a can. They put
real quick. Red Bull is so much cheaper over here.
That right?
It's like $2. It's like so cheap.
That's what I'm saying.
Case in point.
So the tariff to basically make it where it's comparable. If we're charging $5 over here to not have us go out of business over here, they're going to put 150% tariff on the same Red Bull that's coming in, so that way they match the prices. Both of them are $5.
Yeah.
And that's just basically to say, hey, you can't produce it cheaper outside the country. No, you're going to have to compete with vendors in the country. So this is what you have to pay if you want to be in this market.
Right.
So I'm like, people getting mad over tariffs. It's like, that's literally how we keep the advantage.
Well, it's not okay. That's the thing that always has struck me as odd. It's like everybody talking about we don't want tariffs specifically. It wasn't. I don't think it was anybody that was really like, we don't want the tariffs. We understand that tariffs are a useful trade vehicle. Like we understand that they are something that it absolutely is something that is useful. It was the fact that how they were enacted was a disaster. And the fact that they kept saying that the two headlines that everybody kept coming back to were they are not inflationary and they are not a tax on the people.
That is, both of those statements are true.
It is literally an increase in the price that ultimately gets footed by
it's the price
consumer.
Coming. No, that's not true. Inside the country, we have a set price. Anything coming into the country is tariff. So that means the product that lines on the shelf in America, the tariff, to the cost to get it here and put it on the shelf has to match the price of the local vendor who's making it. So There's no tariff on stuff made locally, but there's tariffs on things coming in, and for the
Yes,
make them.
what we're talking about are the additional tariffs that were enacted when we had our Liberation Day, where we were already having the tariffs that were enacted that make them that balances out the trade, that makes things equal across the from across the ocean basically. But it's when you add on an extra 15 to 20% to that, that's essentially an increase in what the end user pays.
Not necessarily. This is economics, right? So if, like, for example, I'll use Dollar Tree as a very good example, right? Dollar Tree adjusted their pricing, and instead of saying, hey, it's only $1, now it's $1.25. And then after they reversed it, they're like, you know what? We're keeping that $1.25. So who really got hurt there? The tariffs got revoked or basically pushed back, but once the prices were up there, the company had the decision to either change it back or leave it, and they chose to leave it because guess what? Now they're making 25 cents more. So a 25% gain, you didn't have to do anything else, didn't have to push more inventory.
Which directly supports my argument for raising prices and leading to inflation.
Right. Well, it could. That doesn't.
Right.
The companies have the choices, right? The companies have the choices to pay or not pay to put the stuff on the shelf.
Is going to choose.
Can I wrap this up here then with what the media is saying, and the CEOs were saying is that a majority of them took those costs internally. They did not pass it along to the customer the first time around, but they're saying now they're going to have to. They're saying in the second half of the year, you're going to see it because they have to pass that along to the consumer. And that that's why you're seeing the fear of inflation going up, because these companies are saying they're going to raise the prices. They're simply going to raise them more.
But that is not so. Yes and no. So them raising their prices every single year, no matter what you do, there's about a 3% increase just because of inflation. Right. Nothing else changed. That, or they play these mind games where that 2-liter drink is now 1.75 liters.
Oh yeah, shrinkflation. yes.
So it's like we're not necessarily raising our price; we're just giving you less, which means we can make more if we give you less.
Yes.
So these are not new tricks. These are all.
But the end user, the end consumer, is paying no matter what it's made out of. They're paying more, and they can't afford that.
That's the way it's been since 1913.
Well, but we had a big jump over the last 4 years. We've had a big jump though, and it's making it tougher.
You have to admit, ever since COVID, and we had that injection of liquidity that everybody had, that.
You mean when they printed a third of all money to ever exist?
Exists, right?
That one.
I don't recall that.
That's one way to put it. Yes.
And that machine is not turned off, by the way.
So then everybody could afford more things. So then in the name of supply chain and logistics and things like that, they had to raise all the prices. Well, now all of those have been settled. All of the logistics and price and things have gone back to pre-COVID efficiency, let's say.
Mm-hmm. And
prices have not. Prices have not.
Because companies are choosing not to.
It will never go back. We'll have sales.
That's another point of why everybody is getting so butthurt about these tariffs, is because we just went through a significant increase in pricing, and then we're going to turn around and, as a policy of America first, we're going to again deliberately increase prices.
For people coming into the country, not internal, rather.
The only people that are paying the higher prices are the people here in the United States.
No, the companies are actually paying those higher prices. And then it's their choice to pass it on.
10% of the companies that have not passed that price onto the consumer.
But they're all saying that they have to.
If they were absorbing the costs, you would be seeing these massive decreases in, Q2, Q3, Q4 results. But then we've got all the celebration of, the Dow is over 50,000. Well, the Dow would not be over 50,000 if all of these companies are mysteriously absorbing all of these costs and not profiting from them.
But that's just it. That's why it looks like they're profiting from them. That the fact that they are up, the dollar that has inflated, they're like, hey, you know what? Technically, we can buy 15% less than we could last year, but it looks like we sold way more. Congratulations, great earnings.
That's what it's about. That's the earnings.
Inflation.
They've been so good the last 2, 3, 4 quarters. It's because of the price of their service has gone up, and they're getting more in. They could sell less units, but still beat their sales forecast because the price is higher.
Yeah, exactly.
And you don't forget the labor involved here too. You remember the wages going up for labor? That's also a company cost too. So you've got that happening at the same time, and it's not keeping up though. There's people that it's not enough. It's just not enough.
And on the other side of that though, that's another reason why people switch and say, you know what, forget those full-time guys. Let's do contractors, because it goes from CapEx to OpEx, and they're like, you know what? I'll do OpEx all day. I don't have to do insurance. I don't have to do this. I don't have to do that. And hence the layoffs.
Well, and then you go to robots. Yes.
Yeah.
Robots on the way.
It's like, hey, we sold less. We cut our bottom lines. We got less people. We have less liability. We're doing great. We're healthy.
All right, I'm gonna go grab my other earbuds. This is telling me this is about to die. I've been on that long today. But while that, Daniel, kick off the whole Blue Owl conversation. You know how much I love Blue Owl, but it rhymes a lot with something that happened back in the mid 2000s, upper 2000s, and what started the whole crap. So start with Blue Owl Capital, which now our favorite guy, Eurodollar guy, is saying this is phase 2. We've had phase 1 when it first happened, and now we got phase 2 happening with this company, Blue Owl. Go ahead. I'll be right back.
Yes. So Blue Owl is a private credit fund. So that's just a fancy way of saying people giving, a private equity firm money to loan out to riskier companies for financing, so they get a higher yield. And they have liquidated $1.4 billion in assets because their fund has essentially started to show cracks of making poor investments as cracks in the economy start to happen. And one of their bigger issues versus maybe a company like Apollo or like a Blackstone is that they really had a lot of their fund that they sold to retail investors. So normally private credit is sold to like big institutions, ultra high net worth funds. But because, retail, we normally want liquid kind of things, not illiquid, they started having a lot of withdrawals, which really kind of started to cause a lot of stress on their fund, which, I think they at one point had kind of limited how much people could withdraw. So that caused even more stress. So one of the more interesting things that has kind of come out of this, amongst a few other things, is that Jamie Dimon had comments the other day that said, unfortunately, we've seen this in 2005, 2006, and 2007, almost the same thing. The rising tide lifts all boats, referring to these private credit funds doing well. And everyone was making a lot of money, but then when the leverage stops, you start to see a lot of these issues come about. So a few months, maybe 1 or 2 months ago, he made the comment of when there's one cockroach, there's multiple. And you're even seeing a lot of the speculation is, if you look at these private equity funds, they're trading down 30%, as well as with the software indexes that you've seen sell off. And that's because a lot of these private equity funds had software roll-up groups, and they're now saying that all of those are worth, let's say, half of what we thought they were, because AI is going to eat software companies left and right, which I partially disagree with. But so you're sorry.
I've seen a little bit of that.
I think you'll see some. I think the part that people are discrediting is that, like, it's like, oh, anyone can build their own CRM now. And it's like, sure. And like a more savvy person that maybe wants something very specific will, but it's like, is the local HVAC guy who, you know, has 3 technicians and runs his own business going to build his own CRM? No. Like, is he going to pick Salesforce? Like, obviously not, but like, there's probably some dude who's vibe coding some random thing and like, he'll happily pay $100 a month for it. So like, I think it will disrupt some of these companies, but not in the way that like, oh, Salesforce is not going to exist anymore. So I think, you know, like, and a lot of these, because I have a friend who does this private equity roll-up software stuff, and he's pretty much says like, depending on the category, a lot of this stuff is so specific, so complex, like no one's going to touch it because it's just not worth their time or their core competency. So to some degree, some of this stuff is being significantly kind of oversold. But I do think it is noteworthy of, you know, if you have a Jamie Dimon or the CEO of Goldman, they normally try to stay pretty bullish because when they speak negatively, it really does spook the market. And when you see Jamie Dimon saying, oh, there's resemblances of 08, right? It's kind of like, all right, well, that's like something
you
to
said
know.
that, and that's going to get attributed, and the AI is going to take it that he said that, and then next
Right.
thing you know, we crash the markets.
There you go. Speaking, it shall happen.
Not financial advice, I guess, even though none of that was.
Right.
But it is something to note because, you know, having worked at Goldman, I'll tell you, the internal research was always like, oh, buy and hold up and to the right? Because they never want to be liable. So it's like when one of these guys is actually like, hey, like, this is something to watch out for. It is like, oh, okay, like, noted, sir. Like, because, you know, Jamie Dimon, like biggest bank, like International Monetary Fund banks with them, like he kind of sees it all, right? So it is something to.
Well,
Jamie's never one been always like sunshine and rainbows and puppies. Like he's.
Oh yeah, hurricanes, cockroaches, yeah.
Yeah, he's willing to, you know, speak the truth, I guess, a little bit more than some of the others.
Yeah. No, that's fair, but you know. I think starting to draw resemblance to a specifically really bad time, 08, it's like, okay, like noted, you know, because he went from like, oh, there's one cockroach, there's many, to this looks similar to the deleveraging we saw in 05, 06, 07, right? I was like, okay, well, that's like very noteworthy.
But he also talked about the hurricane not too long ago, and it really didn't happen. So I there's either something is saving the lifeboat, is saving those situations, or being pushed forward, like I've said, and the term I keep using, extend and pretend, and it's just, it can only go so far. They can only pretend for so long. So
yeah, I mean, you got to remember with 08, it was happening years ahead, right?
Yeah.
And
so
you
it's
only
like
realize it came to a head in 2008.
Yeah, right. It only breaks when it's so bad that they're like, oh, like.
And that's what he's referring to, is that it's about to, I guess, or we're starting to look like the same thing, and like you say, rhymes with back then.
Well, it is. I mean, like you got to think about how everything's so overly leveraged, and that's what really scared the markets the most. I think not just them, you know, specifically with Blue Owl, like them liquidating, but it was the illiquidity of it, because that's how they, you know, companies like Blue Owl, they brought in a lot of this retail wealth because they offered people like, hey, this is a semi-liquid vehicle that you can invest in. And then when people got a little bit concerned or wanted to take profit, and you know, then you start realizing that the underlying assets are not 100% backed, and things are leveraged.
Junk assets.
And again, I don't know how many more parallels to 2008 we really have to have, but
right,
it is, you know, extremely similar to what happened, like Jamie said, in, you know, 5, 6, 7, was you start to realize there's some liquidity concerns, and people, you know, it's not as liquid of an investment vehicle as you really thought it was going to be.
It's just back in 5, 6, 7, whatever it was, 2000s, when they weren't as vocal about it, because everybody said, oh, it's just fine, and this, I don't know that, did someone speak out back then? In the same manner as Jamie
media was, you got to think the
doing
media
now?
was very different back then, and
Yeah,
that
it is
whole
different. You're right.
people catching on to things is going to rapidly accelerate, which is going to rapidly accelerate the end result too.
Yep.
You got to remember too, like with 08, it would have kind of been tricky to speak out about because it was like government program of trying to get people to buy houses and having lower rates that ultimately caused all of that, right? So you're gonna be like, the government did it, right? Which, like, I guess you could probably argue like, oh, well, they made money free for like way too free for way too long, which causes over leveraging and whatnot. But all right, Royce, I know we got 3 minutes. So
it's nothing like what's happening right now with the government trying to solve a housing affordability crisis and
50-year mortgage, 50-year mortgage. Oh, sorry.
100-year mortgage. I'm gonna live to 130.
Royce, what's your time cutoff, Royce?
3 minutes.
3 minutes.
3 minutes. Okay, let's try to get through. We could talk about AI, but
my Mattermost.
we can run out. No. Did you say something?
I said something, but don't say it on here.
Okay,
Yeah.
cool. So let's.
Very nice. I like.
We can always talk about AI next week. It'll still be there for sure. So Royce, go ahead. Did you want to do the charts, or just go ahead and get to the bet?
Let's get to the bet.
Okay.
All right, so, I win. Thank you, everyone.
Winner is Daniel.
So the pick is
Daniel gets to take second now in the race.
Battle.
He didn't take it. He's tied for second now.
Watch out for this next season, Josh. I downloaded Claude Pro Max or whatever it's called. I'm coming.
I fall into the last. I am now at 3. So, but the Apes are at 10. And so that's still in play, the team game here. And the Quanticus or the Quantitudes are at 8. So if they win the last 2, we'll have a tie for the year. That would be like kissing your sister. So what did you pick? What did you pick, Daniel?
That's an old saying. Let's go.
Planet.
I need a picture first.
PL. I was adopted. It's okay for me. No, I'm just kidding.
Yeah. Whoa. You're the reason why there's so many. Never mind.
Right. All right, Planet Labs. What you got here? Break it out for us, Royce.
All right, let's go over there. Let's go to TradingView and see what we got. All right, looking at Planet Labs. I'm on the 15-minute chart. Let's go up to the daily so that way we don't get, overwhelmed by what we see short term for what has been going on long term. Pretty much since that green arrow, that would been a nice place to get in at about $2.80. Yeah. But it's sitting up here way outside the stratosphere, but that doesn't mean it's over because the pink line is not to the top of the band, which means anything is still possible. Looking at this, it looks like it's overbought on the Apocalypse band at 84%. Typically, anything over 70% is bad. Looks like we have a range. I think Josh called for 22, but I also see something right at about 20. So, I mean, it depends on where you guys want to put the bottom at. But it looks like the agreed upon top is about 27. So, do whatever you want to do there.
Daniel, what do you want to do with that? You're the winner. So where's the bottom of the channel?
Bottom of the channel.
22. Is that what we said earlier?
Yeah. We can, what would it be? 22 to
27. So it's $1.25. Okay.
22 to 27.
And then you're first.
So sorry. What's the range at $1?
It's $1.25, so 22 to 23.25. 23.25.
Wait, I think you're trying to go one lower than that. So,
well, the range is you divide it up at starting at 22. It will go down below 22. That's one of the ranges.
That's what Royce was saying, that 22 seems a little bit high.
Seems a little bit high. Yeah.
Go to like 20.
Oh, well, that's where he just said 22. I thought he was setting it. So now Josh is setting.
Yeah. So 20 to 27. So or 20,
so 20
to 28. Hey, $2 range for everybody.
Let's do 20 to 28. That's easy math. I got that.
Okay.
I tried this last week, but it didn't work.
Let's do I'll do what is it, 24 to 26?
Okay, that's the third one.
Okay.
And then Royce can go.
20. I'm gonna do 20. Yeah, let's do 20. 24 to 22. Yeah.
I knew it. Dang it. They're giving us the peels.
All right, Darin.
It doesn't matter now.
Go, Darin.
We're talking about a week time frame here. I'm going to go, man, it could go either way. So that really sucks. It could go either way.
You know your technology? You know your
software. It's software. I'll go below. Yes, I will. Yes, I will go.
I told you.
They provide daily data about insights in Earth.
Yes. So isn't this the same setup we had last week, more or less? Almost.
Kind of.
Except because we were next to each other. But, Josh was up top. And, we pushed him out. All right.
Well, you two were at the bottom and we were at the top. So,
yeah.
All right.
All right, guys. I got to go. Appreciate you.
All set.
Enjoy. All right.
See ya.
Later.
See ya.
You get us back to boop. All right. So,
this really screwed us over.
This is really killing me.
You literally
I feel like whenever Josh doesn't get what he wants during this, it really
you can visibly see it in his face.
It's almost like we talked about Trump again.
It just it didn't really register in my head when he was talking about doing 20 to 28. I'm sitting there thinking, I was like, all right, well, 28's 3 deviations up, and 20 is 4 deviations down.
Yes.
And the statistical probability of it hitting either of those is slim to none.
So it has a 8% ATR, so it could do that all in one day.
It's got
true.
8% ATR.
Look at the recent movements.
That does?
Yeah.
Hold on, just before I gotta say that I have Royce's Darth Vader picture. Thanksgiving. I gotta get a different one though. But it's the Happy Thanksgiving one. That's all I had I got to get a different thing to pop in there when he pops out and goes to a call. So anyway, go ahead. Yeah, we're talking about the ranges that are not going to get reached. And Daniel saying, yes, we can.
It's not impossible. Yeah.
Okay. I guess, well, he took it down now, so I can't even get to it. So that made for some good TV right there, me switching back and forth. All right. Let's go ahead and wrap this puppy up. Like I said, we can talk about, you can move forward what you were talking about with OpenAI here, I guess, because i.e. the circle billions that keep going around. The latest was Meta and who was it? Meta and AMD. Yeah, so it's just they're passing the money all around. Yay!
Well, I think the difference with Meta is that they actually have money to spend on this. For OpenAI is all we say we're going to. Where it's part of the reason that all the Mag 7s have traded down is because they're essentially saying we're going to take all of our free cash flow and put it into capital expense, and and investors are saying I don't know if we see the ROI on that. So they're kind of these once highly profitable companies are now taking all of their profits and spending it. So that's kind of the difference, where OpenAI is we're unprofitable and we're going to say we're going to spend all this money to continue to build out. But so they scaled back their infrastructure spend by more than half. So originally they were saying they're going to spend $1 trillion in the next 3 years or something. And now they're saying 600 billion by 2030. And their expected annual revenue by 2030 is $280 billion, which is a 2,000% increase from where they currently stand. And the way they're going to try to do that is, one, they're looking to raise a round of $100 billion. It's kind of crazy that I feel only a few years ago, 100 million would have been a nice round for a company. But now they're trying to raise 100 billion, not at 100 billion, right? So this is going to put them in the $1 trillion club, which as a private company is pretty crazy. But then of course the market was spooked this week of that Citron research piece which I don't know. I'm not a doomer on this AI stuff. I don't think it's going to take all these jobs, but I hope I'm not wrong for the sake of humanity. But acknowledge that I could be.
One play I heard today was that the reason AMD is getting so involved now is it's going to be because they keep raising the prices of the NVIDIA chips, that AMD is now going to be able to come in and be that cheap chip to fill in the gaps, because there's just not going to be enough NVIDIA and or being able to afford the NVIDIA chip out there to take care of everything that needs to be taken care of as we onset AI. And don't forget, Meta really deep down inside, we all know that he wants to go to virtual world. So he's got those glasses coming out. Now they've got the Meta glasses, and he wants to eventually go, I guarantee you, to a virtual Facebook, a virtual everything world. So it'll be interesting to see what happens there. Any wrap up there, Josh, before we get out of here?
Well, yeah, actually just kind of a thought is, of all of the tech bros that are out there, it's kind of surprising to me that Apple has been kind of sitting on the sidelines with this whole thing, because
Not
they
anymore.
have a fat wad. They're sitting on a fat wad of cash, and they have a desperate need for AI, which they've just recently essentially just conceded to Google. They're like, here, you do this. Gemini is obviously rolling out better than our, Siri was a disaster. I think, I think their AI rollout over the last 3 years was just, I don't know if anybody was really excited about it, but even what's his name was talking about how it's clunky and can't even do the basic tasks that he really wants it to, even though he was previously going on, the investor calls and be like, oh yeah, I use it daily and it's great. But it's just kind of interesting to me that they haven't, or you haven't heard anything from them on this whole AI front.
The last thing, and it's exactly what I just talked about, was because it was one of my three things. The last announcement in this arena was glasses 2, and they're basically going to make what do you call them? I have Samsung products.
AirPods?
Yeah, they're going to make those iPods AI.
AirPods, not iPods. iPods don't exist anymore.
Right? You know what my house is? It's Android. So they're going to make those actually AI enhanced and even have cameras in them too. So that's where they're trying to go next.
And
Google's
already done that. So.
Do you guys think that kind of stuff actually gets adopted? Because here's the thing. It's you hear these AI pendants with the camera and microphone on it. They're always
pendants was Apple too, by the way. Yes.
And I personally, if I show up and one of my friends is wearing one of those, I'm gonna be like, take that shit off, bro. What are we Are you surveilling for the state? Come on, get rid of that thing, And it's I understand the phone's listening and blah blah blah, but I don't know, the phone's listening and giving me served ads, it's not unless, really there's some recording everywhere, but
I think it's seeing too. It's not just listening.
Well, I don't know what it's seeing in my pocket, but
if it's on the pendant though.
Yeah, that's why I'm not so down for that one.
But I'm just saying, even in the earbuds, it's going to people are going to put it on things like TikTok and what they already do with their phones. You don't even have to whip it out to do that. Then it's just constantly going here and shut up, Josh.
Don't whip it out, Darin. Don't whip it out.
That could be a whole nother reason for the little mini cameras too. But no, I think that with people using social media
and then refer to a mini camera.
Yes, I did.
Oh my God!
Natural progression. But no, think about it. Social media, though, it's that's the big thing right now, and having these little different cameras hidden or else is going to be a thing. So I think Apple's going to take advantage of that. Well, they all are, but anyway,
I don't know.
Glasses are also
feel
recording.
It's one of those things where it's we didn't expect phones to always be listening to us, but now it is, and it's but is the difference with between now and it being an actual camera that's always recording and watching, does that feel a bit so more invasive that we're maybe we don't adopt
But how do you know?
Or do you think it still gets adopted?
Do you not remember like 7 or 8 years ago, maybe 10 years ago, when the phone listening to you was a conspiracy theory?
Yeah.
And it was an outrage, and everybody was like, there is no way, absolutely not. And 10 years down the road, and now all of a sudden you're just like, well, shit, my phone's listening to me.
Yep, it's called marketing.
So my thing with the phone listening to you is like, I was kind of always like, I don't know, I'm not talking about anything interesting, but something about like a video just feels, for me personally, like quite more invasive, right? Like when you think of like, oh, like you have a Ring camera and all the video footage is stored somewhere in the cloud that may or may not be accessible by other people. I'm like, I don't personally have a reason for one of those, but I've always thought, I'm like, yeah, I don't really, like, maybe I'd put one on my front door that just looks out, but like having one that actually looks in the house, I'm like, I don't know how I feel about that. And that's supposedly on like only I'm accessible, right? We're talking about other people being able to always record everything.
Let's bring this conversation up in about 5 years when you find out how much of it is already going on.
Thank you. That's an excellent place to cut this off now. We're at 5:30.
Takes phone, throws out window.
I have to keep putting it on my charger because it keeps running out.
Like, what was it?
They are
listening. Who it was? Like one of the Israeli people. I'm saying that I don't know who it was, but he's literally, you can see he's talking on his phone, and they've got a picture of him, and he literally has a piece of duct tape over the back of his phone camera.
Yep.
Oh, really?
Yep.
On the back of it.
Yes. No, literally, like he's got this whole thing taped as he's talking on his phone.
They make camera cases that cover that up for that very reason.
Take a guess why.
It's always recording out the back. Is that why my battery life is so bad? Even though I have a new phone? Like,
just saying, there's a back door and everything.
Yep.
I not that I like this person, but I forget what the interview was, but it was like Tucker Carlson was either doing the interview or was on an interview, and he was saying that every like few months he has to get a new phone because so much malware ends up on his phone from special 3-letter agencies around the world that his phone becomes unusable because they track, like everything he does. And I'm like, that's crazy,
I was in tech for a lot of years. Like, it is terrifying the amount of stuff that can get backdoored onto your phone without you even kind of knowing about it.
Because you track it, you sell it. You sell that information about each individual user. There was a movie about that, and it becomes a way to make more money. So
the Telegram CEO said he does not hire people from the U.S. because there's a particular law that allows 3-letter agencies to approach U.S. employees and essentially forces them to enter backdoors into applications, and they have a gag order where they're like legally cannot talk about it, or they'll like go to jail forever kind of thing. And so I have nothing spicy in any of my messages, but that is a mildly concerning thing to learn about.
All right, guys, I cannot tell anything you're saying anymore. It has completely died. So I'm looking at his lips moving right now, but we do need to wrap this up. So I hope I picked the right time to jump in just then. Everybody say bye. See you next week. Oh, nice.